Boom! Bang the table. That's what we say on every winning trade. That flashing arrow is pointing right at me, BT Stu, master trader and course creator at the Premier Forex League. I'm here to answer the question, what is a pip? So let's do this. What is a pip? It stands for price in percentage. Yep, price in percentage. It represents a tiny change of a currency pair. A pip is represented by the fourth decimal space on non-JPY pairs. Examples, the pound versus the USD. If the pound USD went up 1 pip, it would go from 133.46 shown previously to 133.47. Boom, you're up a pip. If the pound USD went down 1 pip, it would go from 133.46 down to 133.45. Oh man, you're down a pip. Well, that is a pip in a nutshell. Didn't want to make this too long, so this is a short definition. Now, how much per pip do you want to risk? Well, that is up to you. I like to take a plan of 1 trade per day to start, 15 pips per day. Start with just 20 cents a pip and maybe $20 in your account, leverage at 150, raise the pip each day, and you're a millionaire in 6 months. So if you're ready, the Premier Forex League will provide all the training, the Forex signals, live help from master traders, and of course, we will make you a winner. So let's get you started. Join the Premier Forex League today.